It's a spiritual. If you turn.
The theme today is making your elected representatives work for you. And I don't know about you, but we know from the bottom up, this is not working. So we've got people here today who will hopefully be able to tell you what to do to put some pressure on. And some of these people, of course, have done the job. I can see to my right, we've got an MP that we used to have. God knows why we haven't got him now, but that's another story. See, you don't even have to mention a name, do you? And for those of you that are watching this around the world, because we're live streaming today, of course it's Andrew Bridgen. So that is our MP. We also will have somebody who was an MEP and tried to become an MP, which is Ben Habib, will be speaking today. So he has done that bit. And I'm not going to mention everybody else but I will introduce them as we go. But I thought, I know we're in Derbyshire, so don't hold this against me, but we're opening the batting with a man from Yorkshire, and we're closing the batting the same way. And the opening bat will be Godfrey Bloom, who is here. Come up, Godfrey, please. And the closing... Godfrey, a most wonderful MEP, and he's the only person on this earth who has made banking and economics understandable to somebody like me, because it's not my field. I followed him extensively while he was working for us in Brussels, and the person that's following at the end of the day is Father John Dane, the Yorkshireman who's an ex-soldier. As it's Armistice Day tomorrow, he's an ex-soldier and priest, and I can't think of a better way to see us out, Father John. Thank you. So we've Godfrey to start.
Well, thank you very much, and of course it is a great pleasure indeed to be here. And well done, Liz, for organising these events all over the country as she does. Absolutely first class. Just to say, I speak, my background of course is Yorkshire, but I did serve in the Notts and Derby Regiment for several years, so I know this part of the world reasonably well. The Sherwood Foresters, of course, it was then known, so with a rather singularly undistinguished military career, I have to say. Never mind. But my main job, of course, has been in banking and finance, hence the tag on the lecture today. Banking and finance, and I just asked my wife the other day, we just worked out how long I'd been at it, and it was over 50 years. So I've been in banking and finance now for over 50 years, in one form or another. And what is, I think, particularly interesting is I believe that after 50 years I'm just starting to get a handle on it, which is more than can be said for the Chancellor of the Exchequer today. Who I did share a platform with actually some years ago, and even the BBC, I think was any questions, even the BBC moderator did say to me after, "My God, she's thick, isn't she?" And I said, I said, not half. But then to be brutally fair, so was her predecessor and several predecessors before that. Now, half an hour or just under half an hour on banking and finance is a short period of time. So what I'm going to do is gallop through some of the things I think it helps if you know. And forgive me if you know them already, because some of the things you'll know already, some might be new to you, but it does give you a handle on what's going on. And I did actually, at the request of the Institute of Democratic Affairs, publish a book about 10 years ago on, it's called The Magic of Banking, and it explains in some depth how banking works, but it only takes an hour to read. And it was designed for professional people who are affected by banking and finance, but not part of it. They have other professions, you know, they're maybe surgeons or whatever it happens to be. And it's been upgraded 5 years ago. So it does give you everything after this talk if you want it. If you want to go into more detail, you'll find it there. And the second edition actually had some extra bits put in by some of the great gurus like Alistair MacLeod and Claudio Grass, international players in their field. So it's an aid memoir rather than the book, and that's at the back. It's pro bono publico. Everybody's put into it for free, and so the little book, the little aid memoir, is simply at cost. So I'm not up here to try and make a profit or anything like that. So anyway, let's just talk a little bit about money. Now, they don't teach money at school for some reason, and the question is, what is money? You might think, well, that's an obviously easy question to answer, but it's not actually. What is money? Well, money is a medium, or should be a medium of exchange, which will get you goods and services pretty much all over the country, or all over Europe, or all over the world in some form. And we need to understand that money is not the pieces of paper that they give you. Money is not dollars, money is not pounds, money is not euros. That is currency. That is fiat currency. And paper money came about because people didn't want to lug gold about on the streets, and things weren't perhaps so safe. So they had a little note saying, and those of you, I'm sure there's nobody here that will remember the old big white banknotes that said, "I promise to pay the bearer on demand." And of course, in the old days, you could take in your £10 note to the Bank of England and exchange it for its value in gold. And that's how you used to, that's what it did. It represented real money. And of course, J.P. Morgan you might be familiar with the quotation in 1912, "Only gold is money, everything else is credit." So all your pound notes, so on and so forth, are a promise. They're a promissory note, which may or may not be accepted now, or may not be accepted in the future. And of course, you can go right back to the Diocletian period in the Roman Empire. If you go back to about 500 AD, you'll find that one of the great demises of the Western Roman Empire was because they degraded money. And they started to mix alloys with silver and so on and so forth. And so your coin was no longer either silver or gold. It was some kind of weird mixture. And they degraded currency. And the other thing, of course, that you will know if you've had the benefit of a traditional education, that the other thing they couldn't do in the Roman Empire was defend their borders. So they degraded money and they didn't defend their borders. Are you getting it? Ringing any bells? And of course, this is happening in Western Europe, North America, and Great Britain on a daily basis. So you see the degradation of your currency, which doesn't hurt the truly rich because they have assets. They have lots of assets. It hurts Middle England or Middle America because that are the people who don't necessarily earn great swathes of land or have great gold reserves or whatever it happens to be. So you're on the brunt end of it, I'm afraid, if you are those. And that just isn't fair, and it shouldn't happen, but it does happen. I'm going to sort of give you a few ideas of how you can deal with that. But what is interesting with that is, of course, and it came on from the era of Diocletian, it came up to Henry VIII, and Henry VIII wanted to, he also degraded currency as well, by the same reason, either clipping the coins or putting alloy in the mix of silver, so on and so forth. So he degraded it. You always find the degradation of currency is to fight wars. It's to fight wars, and it was ever thus. And of course, Henry VIII degraded the currency in order that he could pay for his adventures in northern France, in Calais. And of course, the only battle he fought, Henry VIII, was the Battle of the Golden Spurs, which was interesting, in which he degraded the currency for. War is nearly always bad. I'm not a pacifist. I was a soldier. I'm not a pacifist at all, but most wars are avoidable, and most wars are a waste of young lives, a waste of women and children these days, and a waste of money, blood and treasure. It's all wrong, and we go on and on doing it, and I'm going to cover in, the Padres slot in a minute, I'm quite sure. We have Remembrance Sundays, and we don't remember at all. We don't remember at all. Politicians, they can't wait to send kids to them. So let's stop all these unnecessary wars and look after our own and see if we can get round a negotiating table. I'm sure we could, and I'm sure we will have to sooner or later. Now, some interesting things when you get back to banking. Banking is an interesting phenomenon. in about, I think it was 1834, the Banking Charter Act came in, and something then fundamentally changed all those years ago, 150 odd plus years ago, that when you deposit your money, if you go into your bank and put £10,000 in, and this is the same today because it's never been rescinded, you go to your bank and you put £10,000 in, it belongs to the bank. It's the bank's. They then give you a promissory note, which is your account. They give you an account saying, yes, we have £10,000, we have £10,000 in your account. But it's their money. It's no longer your money. That account is a promissory note. So the bank have given you a promissory note for their money. And this is rather fun. So you give them the £10,000. Now, the Bank of International Settlements, which is the central banker's central bank, they sort of command the whole thing. Your national central bank, whether it's Bank of England, whether it's the Fed, whether it's the ECB, they are the lenders of last resort. So they are the lenders of last resort if your bank goes down. So what we have here is a rather amusing situation. You put your £10,000 in, and they are then obliged under the regulations to hold back 10% of that. That's the Bank of International Settlements rule. So they then have £9,000 to lend on. Then your neighbour goes in and he wants to buy a small car and he wants to borrow that, and so they can lend £9,000 of that. So he buys your car for £9,000, and he goes along to the dealer, and that dealer puts that £9,000 into his bank account. And that bank, therefore, has to keep 10% of that. So that leaves them £8,100 to pass on. So they lend that on. And so it goes on, and so it goes on. And this is where you get this massive growth in money supply. The money doesn't exist. It's never existed at all. It's a phenomenon of invention. It's an electronic invention. And so the 10,000 that you put in, very soon, by the time it's gone round and round, is probably 30,000 or 35,000. So you have an increase in money supply. And then the bank charges whoever borrowed it the interest on it. So the interest then is 5%, so the banks get that. So these are the sort of problems that we have. And of course, a huge increase in the money supply gives you inflation. All inflation is a degradation of your money. And it goes on year by year. And so with no asset backing, fiat currency is only a piece of paper. It's simply a worthless piece of paper. It's only worth something if you can persuade the cabbie or the barman or the shop to exchange it for goods or services. Now, when you have too much of it floating about, and there's too much of it floating about to cover the price of goods and services, you get degradation of the pound, so or the dollar, and that goes up, and that goes up, and that goes up. And so that hurts people on fixed incomes, that hurts old age pensioners, it hurts people on the minimum wage. It always hurts the middle and bottom end of the society when it comes to actually financial matters. They're the ones that get hurt. It doesn't hurt Bill Gates or any other huge criminal that we have on the planet. So they've already got loads of dough. And so consequently, the more money is manufactured, it doesn't hurt them. It only hurts Middle England, and they're the ones that get hold. And it doesn't matter if you're left wing or right wing or in the middle. That's got nothing whatsoever to do with modern society. Left, right, it's all nonsense. It's them and us. And they, in the main, are sociopaths, psychopaths, or just ordinary plain criminals. And they are, and I don't care which party they're from, they're all the same. They're all the same. Believe me, I spent 10 years in politics, and with the exception of chaps like Andrew Bridgen, who actually stands up and takes a moral stance on something, none of them give a damn. I'd have them all shot. So we're hearing a lot now, because of this problem, this nonsense that we have with money, we're having this degradation of money. What we're moving towards then is a non-asset-backed type of currency that we can't have in the West. BRICS has failed to actually achieve it, although I think they're going to get there eventually if they keep trying. Let's have a look at when we were on the gold standard, or the dollar was on the gold standard. We go back to 1971 when Nixon took America off the gold standard. You have seen what happens when you get away from hard asset back to a paper currency. The spending power of the dollar today compared with 1971 is 6 cents. So a 1971 dollar will buy you 6 cents worth of goods today. That's how degraded it is. And that's the dollar, and the dollar, of course, is a petrocurrency. It's a reserve currency. So you have this extraordinary situation. Even with that, everybody else's currencies have degraded even more, with the exception of the Swiss franc and the Singapore dollar. But they are also degraded because they have moved away from hard asset backing as well. So you have this problem of the total degradation of money. And until we move away from that, we are going to continue to see inflation, and it's going to go on and go on. And of course, we've also got to understand how we're not, the numbers that you are given are all fake, the fake numbers. So what they do is they manipulate it. So everybody here who does any form of shopping know things have gone up. They're saying it's 2%, it's 2.5% at the moment in this country. They're trying to make the same claim in North America. You know your car insurance has gone up massively. You know everything you buy has gone up massively. You know your taxation's gone up because they've frozen it. So your 12,000 allowance has been frozen for years and is going to be frozen for more years. So consequently, that's an inflationary dynamic because you're paying more and more tax. And of course, you'll remember when you're paying your tax, that goes up because they say, oh, well, we haven't changed tax. It's still only the basic tax of 20p in the pound. No, because they've actually moved the bar. And the whole idea of higher rate tax was wealthy. People on really big salaries would pay higher rate tax. It's now drifting in that almost everybody who works hard does a bit of overtime is going to be paying high rate tax, which was never the whole idea to start with. So you have this problem of inflation and degradation of money and lowering of the bar. But of course, this doesn't apply to politicians or the civil service or the men at the town hall, because they get inflation-busting wage rises by and by. And of course, they have something that is impossible now in the private sector, inflation-linked pensions. So when this government came in and gave everybody 5% on average, which is above the rate of inflation by their own standards, you find that all those people down the road, those thousands, millions of people in years to come, in the not too distant future, will have their pensions index linked. And how can they afford to do that? Because the money isn't there in a fund. They take the taxpayer from those people who are not in the public sector. So you get taxed even more to pay the man down the road who worked for the town hall his life. So what you have here, of course, is a problem, because everything starts with the wealth-creating sector. There is no public money. It comes from the wealth-creating sector. We can't all be civil servants. We can't all be politicians. We can't all work at the town hall. Somebody has to get off their butt in the morning and actually go out and earn some profit so that they can then subsidise these other aspects of society to which we seem to have become addicted. Now, I know that some people in the public sector are worthwhile, and you have to have some people in the public sector. But there's millions and millions and millions of the buggers now. Diversity officers, climate change consultancies. Let's take the NHS, for example, when we're talking about money. I mean, we've got 1.2 million employees, only half of whom are nurses, doctors, physiotherapists or radiographers. What do they all do? I mean, you can't go on like this. And I think the last count, we were talking something like £170 billion goes into the national health. That works out at something, if you take it into the wealth-creating sector per family, of course. You can't judge people in the public sector because it comes out of the tax-paying system anyway. So you're double counting. If you do that, it's probably in the region of something like £22,000 per family per year. And you still can't get an appointment with your GP. What do they all do? Apart from, of course, get their juniors to jab people stupid all bloody dead with their flu jabs and all the rest of it. Just seems to me to make you even worse. But I'll leave that kind of thing to Andrew. But who is absolutely right in my view. But so this is the problem that you have with banks, with finance, and you have to remember the more finance you get is raised by bonds. If interest rates on bonds go up, the capital value of the bond goes down. So it doesn't matter whether it's gilts or T-bills or whatever it is, and this is where the banks are in trouble now because they hold, in the last one in California that's just gone down, hold in its reserves almost 100% in American bills and American bonds, which are a tier 1 asset for banking, for the Bank of International Settlements. So you would have thought the bank with only holds dollar bonds, dollar government bonds, would be rock solid. Why has it gone down? Why has it gone broke? It's because if you increase the value, if you increase the coupon on a bond, the capital value of the one you bought yesterday at a lower coupon goes down. This is sort of the beginning when I was doing my professional exams that you sort of had to haul in when you did your professional exams, you know, back, because it's just how it works. And so this is the problem. You can actually have a tier 1 asset that loses money. So the Bank of International Settlements turned around and said, no, we're going to do something about that. We're going to make gold a tier 1 asset. So now there are only 2 tier 1 assets, and that's dollar bonds and gold. Gold in specie, by the way, not gold in ETFs. You don't want a promissory note from a city institution that says, yes, you've bought shares in ETFs, that's marvellous. You bought £10,000, you think you've got gold. You haven't, you've got a promissory note again. So you always have a counterparty risk. And if you're investing money, you want to make sure if it's going to be rock solid, there's no counterparty risk. Now, as I explained earlier with the banks, with a merry-go-round of borrowing and passing it on and pass it like pass the parcel, your problem that you have is that sooner or later your bank must go down. Who's going to rescue it? The central bank, because they're the lender of last resort. Where does the lender of last resort get its money? The taxpayer. You lot. You actually pick up the tab for failed banks. And of course, here's the problem with banks and banksters is, of course, they go down, they're on monster salaries. There are monster salaries. They get their knighthoods, like the old Bank of Scotland, wasn't it? Bank of Scotland, I've forgotten the guy's name now. The bank goes down, it's billions and billions, which nobody knows how to find. The politicians say, where did it go? And the chief executive of the Bank of Scotland said, well, I don't know. So he's now in France, kept his knighthood, and that will be a very wealthy man by the standards of almost everybody in this room, I would imagine. So nobody calls it in. You can't have these kind of collapses in banking consistently through malpractice, but nobody pays the cost. Not one single banker in 2007, 2008 went to prison. They didn't go to pokey. So where did all the money go? And why should we pick up the tab for failed banks? Ordinary people. You're dealing with a moral dynamic here, and it's an immoral concept, the whole thing. So we have a system, until we get back to hard currency, we are not going to change it. And the problem that we have at the moment is nobody's talking about it. Nobody's actually going to the hustings every 4 or 5 years. And it's the same in America. It's the same in America, saying we cannot sustain a banking and finance system and a public borrowing system that we have at the moment because we're going to go broke and there's going to be a massive payout sooner or later in society when savings become worthless. And it's not as though it's a new phenomenon. For those of you, again, who remember their school days, if they had a traditional education, I'm sure that most of you did, we know that this happened in the Weimar Republic in the 1920s, when they were taking wheelbarrow loads of marks in order to buy a meal. And you could buy a house in Berlin for the equivalent of $200 or $300 then. A nice big house in Berlin, which is a major international capital. And we're going down the route again, and nobody seems to be able to spot what's happening. And the other problem, of course, is we do not have a free press. The press is owned by six or seven institutions. If somebody says something nasty about Bill Gates, he simply buys the newspaper or buys the TV. PBS, he didn't like the way PBS were reporting on his drug experiments in the Indian subcontinent, so he bought PBS. Well, that was handy, wasn't it? And when you've got that kind of money, you simply can buy it. You buy everything. You buy everybody. But these chaps don't buy themselves a soul. But I mustn't drift into the Padres piece. So until we get rid of these dreadful, ghastly people, things are going to go on. But there is something you can do. There are things that you can do, which is why you're here, to find out what you can do. And I'm asked this all the time when I do a channel or an interview or whatever. It's very difficult to change systems like this, as you know, just looking at history, how difficult this is. You are really pushing uphill. But there are things, in my view, that you can do for your family. And I think there's some really nasty stuff coming down the road. And there's some immediate things you can do. First of all, the way that they're persecuting farms and farmers and so on and so forth is because they must have control of the food supply. The World Economic Forum, the WHO, they must control the food supply, they must control your health, and they must control your travel and where you go, and they must control your money. Yeah. Now, that's why they're bringing in this digital currency, and the whole of the Western world is going to be getting this. You could first of all, take your money off the table. If you have any money, turn it into gold sovereigns or something of that nature, or maybe gold pretenders. It's coin of the realm. It's coin of the realm. There's no capital gains tax and there's no VAT on it. It's coin of the realm. And you can go anywhere with a gold sovereign. You can go to Delhi, if you will, if you wanted to, and your concierge will be very happy to see if you slip him a sovereign, and he will look after you very well indeed. You'll probably get bed and breakfast. And talk about bed and breakfast is quite interesting. A sovereign would buy you bed and breakfast in New York, Berlin, Paris or London in 1908. It will buy you that today. And it will buy you that in 100 years' time. So you want to get out of paper money. Don't keep anything in a bank unless it's just to pay your bills. You need banking. You've got to pay your bills every month, but you just keep no more than that in. And some say, well, I don't have any money to buy gold coins. Well, I understand that. It's not for everyone, but that's just one of those things. But what you can do, and what I do suggest to you is, when you go shopping at Morrison's or Tesco's, what it is, when you're doing about your weekly shop, pop in a few tins of pilchards or a few tins of Fray Bentos pies or something like that. Every time you go shopping, build up that stash. Because I think bad times are coming, and if you can feed yourself and you've got a bit of room on your plot, or you've got a bit of room in the garden, grow a few spuds or a few spinach. So that's a doing thing. You can take that away and doing it. So otherwise it becomes totally esoteric, or talking a good story. Bloom's very good talking a good story, but what am I supposed to do for me and my family? That's the first thing you can do. The second thing you can do, and this is just what I believe in from a moral perspective, don't pay the BBC. Yeah. Don't pay the BBC. Let them whistle Dixie. Yeah. Let them knock on the door and see how that one goes. Yeah. Don't knock on my door, mate. So we need to get rid of that, because they're the people peddling the whole damn thing. Yeah. So that's something else you can do. You can get your Fray Bentos pies. They used to be meat pies. They're gravy pies now, but there we are. You won't find any meat, but they'll keep you going. They'll keep you going. And so will pilchards on toast or something like that. So you can do that. Buy a bit of gold. You take your money off the table. And if you doubt me at all on that, it's interesting. What are all the central banks in the world doing now? Buying gold. They're buying gold because they know what I know and what you now know. So that's the way to get out of the system. And if they ask you to register your chickens, I have a small holding in Yorkshire, tell them to bugger off. How dare they? They just want to know where your chickens are so they can send somebody around to pull their necks, don't they? Well, I'd like to pull a few necks too. Anyway, that's enough of me. I'm going to be back in that little green room afterwards. If anybody wants a one-on-one question, and if you want the book, it's called Magic of Banking. It's only a tenner. And once you've read that, I shit you not, you will know more than any any financial commentator and any financial journalist. And it only takes an hour to read it, and it's got some coloured charts in it, slightly out of date. Okay, thank you very much.
Thank you.